All right, let's turn to shares of Nvidia this morning. They're turning lower. They were up in response to the quarter, but they did turn lower once the market, I think, started to really digest the potential prospects for 20% tariffs on imports from China. Here to help us break things down is D.A. Davidson's Gil Luria and Kenner Fitzgerald's C.J. Muse. Gil has a 135 price target. He's neutral on the stock. C.J.'s at $200, and as you might imagine, given that price target, as an overweight. Gil, let's start with you. Tariffs are making you look smart right now, but I wonder, what do you take away from the quarter that didn't give you perhaps more confidence in the stock and the performance in the future?
I actually don't think this has a lot to do with tariffs. The stock was already down also after the close yesterday, because this is as good as it gets for Nvidia. Their big customers increased their spend the most into Q4 as they ever have and probably ever will. Two of their three largest customers have said CapEx will be flat into the first half of the year. It's as good as it's going to get in terms of China. Whether or not tariffs matter, there will be more restrictions on sales of chips to China, so those sales are going to be under pressure. And then it's as good as it's going to get in terms of margins. With their current accelerated product introduction cycle, every time they get to 75% gross margins, a new product's going to drag it down back to the low 70s. So they've done phenomenally well. They're still doing well this year, but this is probably as good as it's going to get.
All right, good as it's going to get, says Gil. CJ, what's your response?
Yeah, I think it's a thoughtful view, but one that I completely disagree with. We are in the first stages of the Blackwell ramp. They were able to ship $11 billion in the quarter, or 1/3 of total data center revenues. And that's the fastest ramp in the company's history. I think very importantly, they are supply constrained. I think part of the gross margin miss is the fact that they have these supply chain issues. Also, pricing from TSMC went up on Jan 1, so they have to mitigate that. But if you think about this Blackwell product cycle, I think you're going to get a July quarter where you get a re-acceleration on the top line. And then we're going to go into Blackwell Ultra in the second half. And then we're going to have Rubin very quickly in the first half of 2026. So I think the data center growth story is robust. I think gross margins will push to 75% exiting the year. And as long as they continue to deliver more and more value, drive down the cost of compute, I think that enables AI to become more ubiquitous. Data center will grow again in 26. And the moment the market has conviction on that growth in 26, stock will continue to work.
Yeah, I notice you have a $6.80 earnings target for calendar year 26, but you say, and people can back into a multiple from there. But CJ, you say as well, clear upside to $8 or more when all is said and done. What does that mean when all is said and done?
If you can get to the 300 billion kind of number for next year, that's where, we would underwrite that larger EPS number. But I think very importantly, if you believe in the 650 to 7, you're buying a stock now at less than 20 times next year's earnings, which I think is incredibly attractive. I would say, though, that the main question out there is just whether 26 will be a growth year or whether we will have a digestion year. And, I think we'll have visibility to that around the late May, June timeframe, given kind of 12+ month lead times for Blackwell. And so I think Computex Taiwan will be a very important kind of inflection point where I would expect Jensen will keynote again and that he will offer a view. And I think the moment the market kind of can underwrite another growth year is when the stock can work again. Because quite frankly, the report we got last night was basically in line with buy-side expectations. So what we want to see is that accelerating second derivative and really start to see upside to numbers. And, that's going to be the second half of 25 and into 2026.
Nvidia boosted confidence in the market prognosis for its next-generation AI Blackwell processors with fourth quarter results that exceeded forecasts and provided better-than-expected sales predictions for the current quarter. Despite opening Thursday's trading day higher, Nvidia's stock quickly declined and is currently down about 3.5% as of 10 a.m. ET. With revenue of $39.3 billion, up 78% from the previous year, the company reported fourth quarter adjusted profits per share for the 3 months ending January 26th of $0.89, up from $0.81 in the same period last year. Investing.com polled analysts who predicted sales of $38.16 billion and earnings per share of $0.84. The majority of Nvidia's income comes from its data center division, which reported $35.6 billion in revenue, up 16% from the previous quarter, and exceeding $34.1 billion in projections. The business predicted first quarter revenue of $43 billion, which was more than the $42.05 billion prediction. The gross margin for the time frame is 70.6%. According to Nvidia, we've successfully increased the manufacturing of Blackwell AI supercomputers on a vast scale, generating billions of dollars in sales during the first quarter. In addition to providing some relief from worries about growing competition for enterprise expenditure from Chinese AI companies like DeepSeek, the company's better-than-expected outlook fueled optimism about demand for its next-generation AI Blackwell chips. So, what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
NVIDIA's fourth quarter sales rising 12% from the previous quarter. Looking ahead, the chip giant is expecting a ramp of Blackwell in the first quarter, while CEO Jensen Huang touts NVIDIA's new generation of AI chips. Here with more is CFRA Research Senior Equity Analyst Angelo Zeno. Angelo, it is good to see you. So listen, you saw the print. You've been listening to the call. Angelo, give us your high-level takeaways. What'd you make of this report?
I thought it was a good report. I thought it was a good call overall. I think Jensen addressed as much as he possibly could in terms of some of the issues that are out there. Clearly isn't going to be able to kind of give all the answers and kind of alleviate all the concerns that are out there in the market. But as far as the results are concerned, I mean, listen, better than expected October quarter results. January quarter results in terms of the April guide also on the top line was better than expected. I think really the key was the Blackwell revenue out there at 11 billion out there, and the fact that the guidance out there implies that, hey, listen, we've kind of resolved a lot of the supply constraints out there, and we are successfully ramping here. I think that really is the key out there. And then as far as the margin issues are concerned, that's the big one out there. Again, on the call, they kind of reiterated their stance on the fact that, hey, listen, we're going to bounce back here likely after, this week, April quarter gross margin guide back to the mid-70s, hopefully at some point in the second half of the year.
Yeah, and just to let viewers know what you're referring to there in particular, the company saw its gross margin at 73.5% in the fourth quarter, which was matching what analysts had been anticipating. In the first quarter, adjusted gross margin going to be at most 71.5%. It said 72% is what analysts on average were looking for, but the company has talked about that it's going to get back up into the mid-70s. Colette Kress saying that at some point this year. She was asked about that on the call to sort of drill down into that a little bit more. And she talked about perhaps improving costs, right? Cutting out costs as they get more adept, I guess, with the supply chain. Are you reassured by that? Do you think they can get back up to that mid-70% range?
No, we do. And, it's not very uncommon when you kind of start new product cycles like this. And listen, Blackwell is still in its early days, right? I mean, when you think about it, I mean, we did see kind of that 3-month delay early on. And, we are kind of at least we started slowly ramping here in the January quarter. And again, it's going to be a more pronounced ramp as we kind of go here in the April quarter and the July quarters out there. They've got a huge pipeline out there. We have no kind of concern as far as, or didn't have any concerns as far as the visibility was concerned. It was more about the execution side of things. And of course, the costs typically are higher early on in these kind of cycle ramps. And as you kind of start ramping, that revenue, those costs start to subside, and I think that's clearly what you're seeing here, and they're going to be able to kind of improve some of the efficiencies across the supply chain here over the next couple of months.
Because the new models cost far less to train and use than those made by Western counterparts, Truist Securities analysts wrote in a note prior to the earnings report, the introduction of DeepSeek's low-cost AI model had recently put pressure on Nvidia amid investor concerns about a steep drop in AI spending. CEO Jensen Huang reaffirmed on the conference call that demand is being driven by post-training for AI. He pointed out that because reasoning models require more resources, post-training calls for additional processing power. Huang went on to say that post-training might need hundreds, thousands, or even millions more processing power, and that next-generation AI models would be even more deliberate. According to Huang, the company is more excited about the Blackwell ramp because it was made for post-training. When asked if gross margins will drop in the first quarter, CFO Colette Kress stated that Nvidia's dedication to expanding manufacturing would result in gross margins in the low 70s during the Blackwell ramp. According to Kress, gross margins can rise to the mid-70s later this year after it fully launches. In his discussion on AI's future, Jensen pointed out that consumer AI has only lately been used globally. Agentic, corporeal, and sovereign AI will be the next big thing. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
What do you think about 26 in particular, as CJ just said? Growth year or digestion year?
It's far more likely that it's a digestion year. To get to CJ's number, you'd need to add $80 to $100 billion next year, with at least two of the customers already telling us they're probably at plateauing in terms of CapEx. Microsoft and Amazon have already said it. Google will probably say it by the middle of the year. So without their biggest customers increasing spend probably at all, it's very hard to see them adding $80 to $100 billion of revenue next year.
What about all the geopolitics, the fact that it's been such a sensitive sector and the Trump administration has picked up right where Biden left off in terms of restrictions and adding new ones on China? Gil, do you think that's a big problem or an overhang for the stock and part of the reason it hasn't really done much over the last 6 months?
It's a very big overhang. Jensen Huang visited the White House a couple of weeks ago, and we don't know what he promised. Usually when these CEOs have visited President Trump, they came back with a big announcement. Tim Cook with a big investment. Mark Zuckerberg added Dana White to the board. We don't know what Jensen Huang promised. We also know that there's already legislation that was coming for further restrictions on sales to China. This administration's more likely to be even more severe with those restrictions. And yet the company yesterday said their guidance and their expectations assumes no change to the regulation. So that will continue to be an overhang, at least until we know what the administration intends to do. Let's not forget, Nvidia has taken the tack that we don't know how much we sell in China. We sell to our resellers in Singapore, and we don't know what they do after that. The Biden administration said that's unacceptable. It's hard to imagine the Trump administration is going to accept that type of approach, that they don't know who resellers are selling to, and therefore it's fine to sell into China.
Guys, going to leave it there. Appreciate both your insights. Thank you.
Thank you.
As the AI boom has taken hold and demand for Nvidia's chips, a key source of the processing power required to run the most potent AI models, has increased, the company's worth has skyrocketed in the past year. However, as Nvidia CEO Jensen Huang pointed out following the company's results release on Wednesday night, the newest AI trend for reasoning models, chatbots that basically display their thoughts and processes while responding to inquiries, requires even more processing power, which is why demand for Nvidia products is still rising. OpenAI, DeepSeek, and Anthropic are among the AI companies that have begun implementing reasoning models, which they claim take longer to process and divide issues into smaller ones, then attempting to solve them gradually, a process known as chain of thought reasoning in the AI business. Mr. Huang claimed that the demand for Blackwell, the company's top-tier chips, was amazing, since reasoning-based AI models required more capacity to handle more data and produce better results. According to him, reasoning AI introduces a second scaling law. Models become smarter when training with more computing power, and answers become smarter when thinking for a longer period of time. This was a good linguistic response to Nvidia investors' worries about DeepSeek upending the AI industry landscape, according to Alvin Nguyen, senior analyst at Forrester. Despite the magnitude of the achievement, it seems normal to have another record performance from Nvidia, he remarked.
Sometimes you'll hear talk whether Nvidia is too reliant on this handful of hyperscalers, those big cloud giants. And Jensen Huang said on the call, it was interesting, he said over time, he says, it's the enterprise market will expand to be far larger than that hyperscale market. You believe that, Angelo?
I think that's the hope, right? I mean, we're kind of migrating towards, this world of AI agents out there, and eventually it's going to be all about the physical AI world, and that's really something that Jensen Huang believes in. And as you kind of think about that physical AI world, I mean, it's gonna require the enterprise space to really kind of more aggressively invest out there, on the inference side of things. And, we're believers of that. I think, the question is, how long does this take? Right now here, that about half their revenue right now is tied to these hyperscalers. We don't think that changes much here over the next couple of quarters. It will continue to be largely driven by these hyperscalers out there. But we do think over time, the fastest growth area within their kind of ecosystem is going to be, on the enterprise side of things. The question is, again, it's probably 2 to 3 years or even, more than that down the road. It's not something you're likely going to see at least over the next 4 to 6 quarters in our view.
Is there any vulnerability in being so exposed to the hyperscalers, Angelo?
I mean, there's always vulnerability to it, but I will say this. I mean, when you kind of think about these data center cycles and you kind of think about who these customers are, I mean, they are literally investing, in compute, utilizing all free cash flow out there, right? It's not like they're borrowing or doing what what a lot of these telcos did back 25 years ago in terms of what they had to do with Cisco out there. So it's a much different world out there. And, given the free cash flow trajectory of these companies, the need for a significant amount of compute here over the next kind of 5 to 10 years, and you kind of think about just the overall cloud environment and the growth of cloud here looking ahead, we feel very confident, or much more confident, with them being kind of tied to those hyperscalers out there than we would any other kind of customer category out there. So from that perspective, I think you should be okay with that. But there's always concerns of kind of overbuild and what have you. I don't think you're at that point in the cycle yet, and you never know kind of how long these kind of data center cycles really last. I mean, it could last 5-6 years for anyone knows. So it'll be interesting to kind of see how this cycle plays out to other cycles.
The sustained demand for Nvidia AI solutions is reflected in the record earnings. One effective vocal response to concerns about DeepSeek affecting their demand is the focus on reasoning models pushing more computation, not less. Mr. Huang even praised DeepSeek on its success, stating that its logic model had sparked excitement around the world. According to him, it's a great invention, but more significantly, it has made a top-notch AI reasoning model publicly available. To extend the performance of their models, almost all AI developers are using DeepSeek's reasoning model R1, or chain of thought and reinforcement learning techniques like R1. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.